Welcome back, Market Mastery, the 1 hour you need in the market to make you money. We're going to get right into it. My friend Stock Savvy Shy will be joining us here momentarily. He's just wrapping up another stream that he had to do until 6:30 Eastern, so he'll be here in about 15-20 minutes. So we're going to get through everything we need to get through right here, right now, so that you guys can get juiced up on those SPY options trades and make you some money. Let's see, AI. We got a lot of huge earnings coming up this week. And I think that this is going to be a pretty pivotal week that's going to define how the next couple weeks are going to go in the market. We're going to be going through, I'm going to give you a big earnings trade that I think is going to be pretty good. Let me just put it that way. I just need to share this post out. As always, if you could retweet this, tag some tickers, show us some love. We greatly appreciate your support and you being here. We are here for you to make you money. That's it and that's all. So if you get the opportunity to share that out, that would be massive and we would love you forever. For those of you that want to follow along, get your SPY chart pulled up and get that ready. We are going to be going through that right now. Let me get that pulled up on the screen here. Bada bang, bada boom. Let's do this one. Which one do you guys prefer better, option 1 or option 2? Option 1, option 2. Option 1 or option 2? Which do you prefer? Option 1, option 2. Option 2, it is. Thank you, Cool. Your vote counts for every vote. So we've got the SPY pulled up here. We're looking at the daily chart. We're going to give a breakdown of the action. Then we're going to get into our 2 SPY options trades and then break down our next big earnings trade that's going to make you some money for the week and maybe for longer. Again, these trades have hit nearly 85-90% of the time for 100% plus. We trade these 2 ranges to ensure that you have both the bearish and the bullish options trade every single week without fail. The number one goal is making sure that you guys have what you need to make some money, and we're going to get you set up with just that. So pull up your SPY charts here. If you do not have a SPY chart that you can pull up and you want to follow our charts directly, you can simply go to TradingView and type in Penny Boys, one word, Penny Boys with an I. You can follow this exact chart. We're going to publish it with this analysis, our deep dive, and everything that we think is going to happen on it. And we are going to make sure that you are set up for that success so that you have those trades mapped up. But if you want to just download it and have it for yourself, feel free to do that. That makes things a lot easier. All right, let's get started. I was trying to retweet this, but clearly, there we go. 1 second. Okay. Boom. Just want to get that posted. All right, let's get cooking here. If you're new, check in the chat. We love to know if you're new. If you've been with us before, type your Discord name in the chat. We always are picking from there for prizes. We love getting a good flow of people in here. So for these SPY options trades, it is important that we go to the 15-minute chart. That is going to be where we break this chart down and begin to understand these ranges. So again, go to the 15-minute chart on the SPY and pull that up to follow along. Or, like I said, simply follow Penny Boys, one word, on TradingView, and we'll publish this chart for you. So right now we're sitting at a weird little place of indecision. So you can see that we've got a bare bones bottom down here at 591, which looks like where we might be heading. But we've seen SPY trade like a bond yield. It's really odd. You'll get the run up, gap down, run up, gap down, run up, gap down. Very odd. So what we want to do is we want to take that and use that to our advantage, which we did. As we said 2 weeks ago, if we break below 607, we could trade to 603. If you took those options trades with 2 weeks out and we're down at 597, congratulations. That's a 300 to 500% trade. 300 to 500%. From watching this stream one time, you had a 300 to 500% trade on the SPY. And then if you went long at 600, the level we broke down for you, you should have had at least a 30 to 50% trade back up to 603. So we've set you up for success time and time again, and we're going to do that once more. So as you can see here, it's interesting that price is holding up right around 597. The last time we saw this level matter was right here. And when we draw across, we can see that we've actually interacted with this level a few times. Now, is it worth putting on the chart? Maybe. We have to zoom out a little further to make that make sense. So going across these highs, we can see, okay, another rejection here, another rejection here, breakout here, breakout here, breakout here, almost a rejection, and then potentially support, 597. So we're going to go ahead and use this as kind of like our floating barometer here to know kind of where we stand in terms of price right now and what we can expect. I think this is going to be kind of our midline pivot while we focus on both 603 and 591. So Shai is going to be here in like 15 minutes. Nikhil. So basically, we need to use this level as our barometer to understand if we're going to go lower or higher. I think break below 603 means we probably have more lower on the horizon. The way this is selling off right now is reminiscent of the last couple times we saw this kind of sell off, and we typically went a lot lower. So our first trade up is going to be our bearish SPY options trade. So if you want to go to your brokerage account of choice and you want to go ahead and pull up your SPY options chain, we're going to go to puts, and then we're going to select March 10th probably. It's about 2 weeks out. I like that. So again, looking at the puts for March 10th, and we want to go ahead and flip back to our chart here, and we want to take a look at where we think this thing can go. So let's do a little pop quiz here. Where do you think that, based on this price action right now, what would be the next most logical target on the downside? Let's do a little live action, see who's learning. What would be the most reasonable target? So Breckles says 591. Anybody else? Thoughts? Because remember, options function on a bell curve, right? So we want to be able to sell when we hit that peak where we're above or below, when we've passed the strike price and we're in the money and we still have some expiration. That's when we want to close those out and sell. We do have a winner. So Breckle, you are correct. But for the sake of this, the first kind of actionable target would be 595. Well, there's Bull coming in 585. Holy shit. He's really bearish now, ain't he? That's wild. So we're going to focus on 595. So I just realized I never put this up. Oh, Doyle rules. Yeah. So we're going to look at 595 as our kind of actionable midline target. The reason we do this is because, say we're looking at the 595 puts, which is only $2 to the downside, and we get a move in this chart where it hits 595 and then it just skyrockets down to 591, and hell, maybe even goes to Bull's target of 585. These are already in the money. So our delta is going to just skyrocket and make a ton of money. So there's two ways to trade it. That's the safer but more expensive trade that can pay out, or you can take the lower cost option, which is slightly more risk, but again, will offer a larger upside incentive we don't have a 591 strike for March 10th. Let's look at March. Let's go a little bit sooner. Let's go March. So we're going to adjust to March 11. Good. We got dollar strikes here. So we're going to go to March 11th instead. It's 11 days, a little bit tighter, but we're looking at the 591 puts. So again, that's pretty much our stopping point. That would be my lowest target for now, 591. So in the event that we come up, and this is the move I would expect to trade these. If we come up at the open and we hit 599 and we play around here until we get rejected, so the 15-minute candle has closed below this line, then I'm going to enter the 591 puts, and those should pay as we head down to 595 and below. Now, the alternative option is the 595. But again, it's mostly this is a target for us. So if we enter the 591 puts here, by the time we get down to 595, this thing has moved down $5. Those should have escalated, and you should see I would say a 20 to 30% on the low end return in front of you at that time. If it keeps going, you'll make even more. So again, keep that in mind. That is the key. So So that's going to be our bearish trade is the 591 puts for March 11th. Now on the bullish trade, the bullish trade I think is far less likely, but basically we have a nice support base right here. You can see that we've picked up here a few times. So I would want to trade off this as an entry point for the 603 calls that would be dated for the same March 11th. And I would be buying those on a support bounce here. And then my first target would likely be 601 where I'd start selling. And then I'd ride this up to 603 and I would sell, if I say bought 3 contracts, I would sell 1 here, the second here, and I would hold the third with the stop in place where if we fell back to the first target, I would close it out. Because there's always the opportunity of seeing SPY act like a psycho and break out. That's just always reality here, guys. That's how she goes. Yes, die. I like the 585 gap fill. That would be awesome. There's a lot of room down there. So to reiterate, the situation for the 603 calls for the bullish situation are pretty straightforward. Again, it's just a neutral open and support test and obviously confirmation. Enter, I would enter the position here. As it goes up to test, just like it has in recent events, in recent days, I will be scaling this out here and here. So easy peasy. That's that, and that's all. So let's get into the next one. We have a couple big boy earnings going on right now. Big boy earnings. So pop question. Who do you think will experience the most volatility out of the earnings candidates for the week? Which chart do you think will be the most volatile? Drop it in the comments. Okay. NVDA, Snow. Interesting. Prime set up for a calendar. Let's do it. Very interesting. So we're going to start with number 1. Obviously, it's going to be NVIDIA. As you can see, this thing has played out like our little darling on the chart. If you recall, we talked about as you recall, we talked about this 130 and change being a very critical level here. And as you can see, we were spot on. Breakout, it was the breakout point, as well as it was a consolidation and support. Went up to 143, came down. Nice little touch there. This is our area of confluence, culminating in earnings, ironically. How this chart, how everything has played out is beyond me. That it could play out this way. It's crazy to me. Oh, I feel like I got another sneeze, but it's not happening. So everything is coming together to play out exactly as we had anticipated. Look at how spot on we were at this level. It played out well. Now what's next? So looking forward, I'm going to have to flip to the NASDAQ because I don't even recall the earnings preview per NVIDIA. I'm going to go to earnings. Boom, 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 boom. Why isn't this loading? It's not loading their quarters. What the hell's going on here? God, the NASDAQ website sucks. It sucks so much. Oh my God, is it seriously not going to load? Are you kidding me right now? Are you kidding me right now? This is really annoying. Let's see if I can pull this up on a different browser. While we wait for it to load. So we wanted to pull their earnings projections. Wow, this is a way better browser. My God. Why is it not showing their quarterlies? Okay, it's just not showing. That's really annoying. Yeah, sorry guys, I don't know why it is not allowing us to see that data. It should be right here, but it's not showing the estimates. It's just showing the change in consensus. So that's really, really annoying. Oh, God damn it. All right. That's super annoying. That's just really pissing me off. Page unresponsive. Yeah, unfortunately, the NASDAQ website sucks. So it looks like we will not be. Looks like we will not be looking at those projections on there. We could see them slightly on TradingView. So revenue estimate 38 billion, earnings estimate 0.845 compared to last earnings, right? 33 billion was the estimate and 35 was reported. So they, again, up and up. And look at how the price reacted to that. Sell-off ensued. The estimate was 28. They beat by 2 billion. Look what happened. Sell-off ensued. So again, since we saw this kind of beat, right, almost a 10% surprise to the upside, NVIDIA has not shown upside post-earnings. So either these earnings and guidance have to be exceptional, absolutely exceptional, or it's just not going to happen. So I want everyone to be very mindful of NVIDIA earnings. And if you're trading it, be very careful. I think it would be essential to have a hedge, which I will, in the event that this does not go as I feel like with a lot of people right now, they're very stuck on the idea of earnings only go up. And I want to make sure that nobody gets stuck in that. So basically, this is going to be, yeah, he's going to be here at 5:30. I've said that like 8 times thus far. It's 5:26 or 6:26 Eastern. Okay, thank you, Devin Stinson. Thank you. Wow, that's next year. That's crazy. But yeah, it's going to be all about guidance all day, every day. We really, really, really need to understand that unless the market is pricing in some sort of forward thinking value, which it already did. Remember, this thing ran from nothing. This is when the market started pricing in a hopeful upside. Now we're in a position where their earnings need to be so dominant that it just shocks the world and we go to 200. That's how good guidance has to be. They have to basically roadmap how they are going to dominate the earth and basically be the only voice in computing that makes any money, which is unlikely. So that being said, if NVIDIA falls post post earnings, where will it go? I think that's a pretty simple. Oh, shalom. There you go.
Hey, let me am I not on yet? You're on.
You're on here now. Oh, you can turn yours. Oh, you might still be able to broadcast yours. What do you want me to try?
No, I'm on mine. I think I just hosted mine. I think it's on my account.
Damn, look at you, tech savvy. Tech
Look
savvy
at that.
shy, dude. Change that name, boy. I love it. So we were just talking about the ridiculous expectations that have been placed upon NVIDIA since they had their big earnings breakout back in November. That unless they come out with something otherworldly, they will either trade sideways and down or sideways.
Gotcha. Okay, so I mean, first off, what a tough market right now to be in. It is a brutal market for a major catalyst like NVIDIA to report their earnings. You just got to ask. Doesn't it feel like every single quarter it's like NVIDIA has to save the day on the earnings report? It feels like it's like a repetitive thing, a vicious cycle that occurs consistently. But yeah, I mean, NVIDIA is going to be the end all be all on what's going to happen in the market in the near to medium term. I think this is probably one of the noisiest quarters in years. I think the end of 2022 was probably the amount of FUD and noise that's around NVIDIA and in the print than it is right now. And it is justified because there is some heartburn out there. I know the news story over the weekend about Microsoft's data center cancellation on data centers caused more fuel on the fire of, is there a peak CapEx spend? And I think this most recent earnings cycle, like CapEx from the hyperscalers, they weren't as explosive or incrementally increasing as much as before. And you saw the cloud workloads, the AI workloads on the cloud, like be lighter than expected as well. So I think there's just like a lot of FUD right now associated with its name. And the things for NVIDIA that you guys should be looking out for is not just like the actual earnings. Like it's honestly, like I do think they're going to triple beat. Like that's not what I'm like. I don't think the market is thinking they're going to miss at all. However, the biggest question will be like, how long can NVIDIA sustain their gravitational pull on AI infrastructure spending? Will supply constraints finally ease? Is there going to be another leg of exponential growth? Either way, there is an absolute arms race right now that's happening across the board. And you're starting to see signs that the hyperscalers are evolving their AI spend. It's not purely towards just data centers. It's not purely towards hardware anymore. I think that whatever budget they committed to, I think it's going to be that, but I think it's going to evolve. It's not going to be what it's been like before. So I think there is certain pockets of the semiconductor ecosystem that should be worried. Like they actually should be worried. NVIDIA really isn't that. I really do believe NVIDIA has cemented themselves into permanence in the AI thematic, not just the AI thematic, in the quantum thematic, physical AI thematic. Like their CUDA platform and NVDL link is essential for any kind of workloads going forward in the future. Like they've cemented themselves. But now there's going to be that quarter where it's going to be ugly. I don't know if it's going to happen this quarter. I really don't, because I still think AI is very early innings, and you're seeing XAI, for example, they're about to spend billions of dollars on computes. They're going to have to go through NVIDIA. Like there's still a ton of compute constraints happening across the board. So like, I don't think supply is going to be an issue. Demand's way higher than supply. And you're seeing a lot of the commentary also on the earnings calls from big tech. They're compute constrained. That's why they're like not really, their AI workloads were weaker than expected. So I do think NVIDIA is fine, but the perception of what they're going to report is even more than important than the actual numbers, because this is a tough market right now. And even if they produce excellent numbers, in the eyes of the market, who knows what they perceive those numbers as? Is it going to be a lower than You can see their incremental beats diminishing. You can see their unit economics getting tighter and tighter quarter after quarter. Is that what they're going to spotlight on? Maybe, and that's going to cause some FUD. But as of right now, like I am trading NVIDIA. I do think it's going to be up to the right. And as long as they hold their 200-day moving average, I'm kind of like maintaining my trade right now, just because we haven't talked in a couple weeks. But like I had a 12% cash position, like 2 weeks. I started building a cash position. I thought valuation was extended. I wrote to my subscribers literally Friday. I think it was a Friday or Saturday before the market started pulling back. I was like, I'm raising cash, guys. Valuation is extended for what I'm seeing in the earnings cycle so far. We're seeing that course correct a bit right now in the market, and it's totally fine. It really is totally fine. The indices, they're down 4 or 5%, but like under the hood, you're seeing a lot of growth tech is just like down 30, 40, even someone's like 50%. That's just part of the course as being a growth investor. I'm sorry, it just is. A lot of like the movements we've seen in the past in this year alone really wasn't backed by fundamentals. Like Palantir, it was somewhat. I know it's stupid expensive, but like the street thought they were growing at 26%. They came in at 31%. That bid from their earnings backed by fundamentals. That's the classic case. But a lot of the other names, it was really just multiple expansion. It really is. They proved that they got some kind of Gen AI flow coming in their fundamentals, and now the market's willing to expand their multiple because they're proving that maybe there'll be a stage 2 AI winner. Jury's still out, but I think it's the course correction. Like you're seeing Robinhood, for example, like Robinhood's pulled back significantly. They had a massive earnings, and it's not just like AI either. It's just like across the board, the winners are pulling back. And like Robinhood, you guys have heard me say this, like I'm at the mag investor. I am bearish on fintech. I think it's one of those industries that they're going to cannibalize each other's take rate. It's a low margin business. It's only so much of the piece of the pie they can fight out for. Yep. But Robinhood, only one that has a moat, in my opinion, the only one, and they proved it in 2024. So if you do want that fintech exposure, this might be an interesting level for Robinhood. I don't know. What do you think about Robinhood, Austin?
I think you're spot on about fintech, but I guess I put them in a slightly different category. I see them as much media brand as fintech, and I think that they've just kind of transcended. They've transcended like singularness. I feel like, like whereas like, oh, it's just a brokerage. Like they really have done a great job making themselves an actual brand presence. You know what I'm saying? Like they have, and thus they have additional revenue verticals that like they're going to have even better opportunities that others aren't. They're just not. At the end of the day, I think for this, the race is just to get as many traders as you can trading on your platform. Because keep in mind, they've got money coming in through the HFT bullshit. They're selling tons of data on the back end. I think they are as much a data provider and a data company as they are a fintech or like front end interface model. I think that they've just done an exceptional job, like really building out their platform. And I think they've set themselves up to become a Fidelity. Like in 20 years, they'll be like a Fidelity. Like they've captured the hearts and minds of millennial, Gen Z, and below, and they're just adding more tools day by day. Not that I use them, but they're adding more tools day by day that will make it a more robust platform for anyone.
Well, I mean, you nailed it as well. Like I think the ethos of Robinhood isn't. I think it's crucial to understand that how much this company actually has transformed in the past 2 years, especially since the GameStop fiasco. Like this used to be a business. Yeah, this used to be a business dependent on transaction-based revenue. Like they're weaponizing volatility for their own benefit. Order flow, but now that's not the case anymore. Like their order flow is now evolving into more of a diversified subscription-driven engine. Huge, because now that compounds the revenue while reducing the exposure towards market volatility. So they aren't just capturing the activity, aka weaponizing volatility. They're building financial stickiness, and they're converting casual traders into long-term engaged participants willing to subscribe to the gold membership, invest into the platform because their UI is chef's kiss and nobody else can replicate that. They've tried, they've failed. And they're also spending a ton of more time now into their ecosystem. So like, I do think they created a flywheel, and that's one of the characteristics of a moat. It is, guys. It just is. And fintech is not a moat driven business thematic, but Robinhood created a moat within that. They have a flywheel ecosystem. So
Yeah.
I think it's they pulled back 40. Was it? Well, they came from 60 to 48. So not even that much. 25.
66 to 48.
Oh, 60. So maybe
So
closer
this
to
is the
30.
question you right, and you brought it up like it's looking at it through both the lens of the old and the new, like what they were, and there are certain ways to measure progress, earnings growth, et cetera, like the fundamentals of the business, as well as what are they evolving into. It's almost like they are, and I think this is also just the future of the world, not to get too far into it, but like whoever does media best wins fractionalized fame. There will never be another like ubiquitous star like there once was. And I think that this is case in point of how businesses are taking advantage of this by becoming, again, a personality, almost a media platform, something to go off of, and then roping in the known universe of creators that use their platform to talk about their platform, whether they have to pay them or not. I mean, they won because everyone's talking. We're talking about them right now because they executed, not because they wanted us to, because we've gotten utility and benefit from it. So I think as they evolve into like basically the bank of our generation, which they will be, you're talking my savings is going in. Like think of the frictionless ability for them to accelerate any money I wasn't going to put into the market. Let's say I usually keep a $2,000 rainy day fund. You think that's going to sit in cash if I have it at Robinhood being my primary quote banking entity? No, they'll finagle a way to get into something safe and blah, blah, blah. Okay. Yeah. But also it makes sense. So I get it. And they found a way to just generate velocity of funds into them. And it's brilliant. And you got to give them credit. Now, earnings growth, that's a different story. Can it continue? I am shocked that with 141% surprise that, no, I'm not shocked. So I am and I'm not. It shouldn't have sold off this much. I expected back down to 59, 10%. I didn't expect this. So when this was trading at like $8 to $10, this is when my like earnings growth model that I work into options trades really pays off. Because in reality, people were trading this earnings growth right here. The earnings growth that was anticipated on February of 2025, we started trading back in January of 2024. Because the move comes prior to the announcement. Now, NVDA is another good case in point. I was trading that a year prior to that earnings growth. However, I didn't anticipate it to be as explosive as it was. So I got to capture the additional upside. Our Robinhood options contracts are up 9,000%. 9,000% because we anticipated this growth. Now, again, they're putting themselves into an NVIDIA style situation now where if they don't put something groundbreaking in front of investors, we're going to see correction. So the question is like, where do we look for correction? I think for this one, it's just simple trend strength to start. You want to find where did the buyers hold their line? Obviously, here was additional volatility in November where buyers just washed them back out, but that was earnings. So that was, I would call that variable. But looking forward, we've respected this support since August of 2024. Let's continue to assume we'll respect it. We come down at 45, 46. I think it presents a buying opportunity with the tight stop loss and risk management in place. Well, personally,
you mentioned, here's my issue with like fintech. Even like I think Robin deserves a premium. They are juicing a lot of the crypto revenue. That's like they went up 700% their crypto volume. That's causing an explosive earnings expansion. Story. If you're part of the camp where we haven't hit that euphoric phase yet of this crypto rally, there's a ton of room for Robinhood to run. But if you're part of the camp where the bear market is going to begin next year in crypto, that's my cyclical risk, I think, associated with Robinhood. Because you mentioned Fidelity. They have the same market cap now, Fidelity and Robinhood.
Yeah.
They're essentially even. But the multiples are way different because there's a tech premium and
right.
It's tricky. It's a very tricky stock to price, and that's why I missed it. I just like don't know how to value this company, and it's not my lane, and that's fine. Totally is fine. That's a classic example, guys, of you can see special, like a stock that's being special and a company that is special, but if it's not your lane, it's okay to miss it. It just is, because there's going to be names that it's not your edge and you get burnt on. So I don't know. I think Robinhood's interesting here just because I think it pulled back too quickly. And I'm part of the camp where I think like we're not done in crypto rally. I don't think we're done. And I think once it reverses course, especially on a dominant print they had like just a couple weeks ago, Robinhood is one of those names that will capitalize the most in the
Key
near term.
beneficiary. Yeah, there's a lot of talk right now that a lot of this recent downturn is manipulated because the run is coming. I mean, you're going to see the holy unveiling of every major crypto. So your Solanas, Cardano, they're all going to be funditized. And then they're going to get all of the boomers to basically give money to them in order for them to own the asset they could just go buy. So it's kind of like paying someone a fee to own gold for you. Just buy the goddamn gold. Just do it. But
you're not wrong.
It is what it is. So moving on from Robinhood. So again, that's kind of like my final point there is like this $58 mark is a key level because that's where we washed out post IPO. Our upside is definitely 85 still on the table. We just need to be above 58 for that to occur. So as far as momentum and swing trades go, that's the breakout area I'm looking at. I don't hate, 45, 46 for some ads, but it carries a lot of risk. Again, I own this name from like $8 to $10. So I'm sitting pretty. I've scaled out profit. The rest is hold it for while it triples and doubles over the next decade or two. That's it. And that's all. So a quick aside, as he just mentioned, to look at what's going on in crypto right now, half of its market cap value of Solana at the very least has been liquidated. So the question is now, where does this stop? If it stops at all. So I think people also have to look at this as like, think of it in the sense of an IPO, right? If you're in an IPO at cents, right, and this thing's hitting ridiculous multiples, you're going to flood the market. You're just gonna. So I think that's kind of just an unavoidable figure right now. But to give you just 2 seconds, I think we still got some downside. Handle like a 60 bill, that's realistic for us to see some relief because that's where we consolidated before we broke out. So there's a ton of buyers locked and loaded at this level. But until then, guys, it's free fall until then. So trade that at your own risk. Let's get into another big one coming up this week that I know you'll be watching closely, Mr. Snowflake. And I wanted to point out here, you can see it in the bottom corner, either screenshot or take a picture of this right now to get access to my good man's here weekly write-ups on these earnings statements. I'll let you say it actually.
Yeah, absolutely. So we're just beginning the fourth industrial revolution, guys. Like this is not, we got a ton of runway right now. And you're seeing like the sell-off that's occurring in the market. It's kind of giving you an opportunity, in my opinion, to get it in before the software fireworks begin, because the baton has gone transferred from stage one isn't over, but stage 2 is now coming to light of AI. And you're going to see this is the stage where AI meets permanence. There's no cyclical risk. The crown jewels of this revolution is made in stage 2 of AI. And it's not just going to be Palantir. It's not just going to be Cloudflare. There's going to be a couple others that kind of enter that prestige table that requires a ridiculous premium the market is assigning to you because they deem that AI won't cannibalize your product, your moats. You prove that you belong, and because of that, you're going to come out of this thriving with unprecedented pricing power. Whoever finds those 5 or 7 or 10 names is going to be sitting pretty 10 years from now. Like, just say that. It's very similar to the cloud days 10 to 15 years ago when you saw Azure, AWS, like have this infancy and then they explode. I do think there's going to be some software names that are going to mimic that. You saw Palantir and Cloudflare. I think Snowflake's going to be one of those re-ratings this year. And I don't know if it's going to happen this cycle. I was a lot more confident 2 weeks ago or 3 weeks ago, not just because narrative falls price action. I just called out some reasons why. The AI workloads on the cloud was weaker than expected. It was due to constraint issues, but it was weaker than expected. So that is worrisome for software names with a consumption model. And then you also saw Datadog, who is the first software name of the real consumption model, report this earnings. It was weak. I'm part of the camp where observability is at risk in an agentic AI world because you can create an AI agent that does a lot of what Datadog does. So maybe that's what the weak guide was. but I'm being cautious. It's a 10% position for me. It's my second biggest name. I built a strong position in the 130s because it was accumulating for like a year, I feel like, which sucked because like even though Palantir is my number one position, it 10x while Snowflake was just basing. Either way, Snowflake could be also one of those names, software names, the cycle where it's like a Confluent, Monday to Com, Atlassian, where a good enough report can cause it to run. And why is that? It's still lagging, guys. Like just zoom out 2 years ago. It's still kind of where it was. It's at right now. It's not like a lot of the other software names like the Cloudflares, Palantirs, even CrowdStrike, where they 4x. In that meantime, like these names are playing catch up a bit. So a good enough print can cause it to catch a major bid. And a really great print can cause a re-rating. I think sometime this year, there's going to be a re-rating on Snowflake, and it's going to happen with back-to-back dominant quarters. We already had a really great quarter last cycle that caused the pivot of a narrative. AI won't be cannibalizing them as a data warehouse. That maybe there'll be a data platform for enterprises. We're not officially yet at the wow, it's happening, let's run stage. We need one more dominant print again. So will that happen on Wednesday? I sure hope so. But again, the earnings gods hates me because same thing happened last cycle. They're reporting the same afternoon as an NVIDIA. Like the best case scenario, guys, is Snowflake produces a dominant earnings report like last cycle, but NVIDIA craps the bed. It gives you an opportunity to kind of buy that Snowflake anchored gap up because NVIDIA is like scaring the whole market on AI. But if they produce a dominant quarter, I think the re-rating is going to occur, and I'm going to be adding. I'm going to be very aggressive with my Snowflake ad. I think software is still where you want to be in 2025. Market's feeling a little iffy on it. That's when I like to pounce. But if it does, I said $300. I think 300 by 2026. I still stand by that, and that's a really bold statement to make because that's nearly a 2x. And I still no schmuck would suggest that stock can go 2x. Like that's not a good investing. That's really irresponsible. But like I just think that when a stock goes to a re-rating, I have comps I'm basing it on. And if a market deems it as the same valuation as same category as a Palantir and Cloudflare, that's why I'm saying $300. So let's see if they deliver. They still have to deliver, but I'm underwriting them growing 30% sometime ending this year, growing a quarter, 30%. And right now the market's thinking 24, 25%. That's the disconnect.
So last earnings, surprise is 31% to the upside on earnings, a little below 5% on rev. What kind of numbers would you like to see here?
Net retention rate, I want to see a tick back up because that was a big tell last cycle. Like, oh, people are spending more. I want to see Gen AI reflected 3 to 5% of their revenue. I can't remember. I want to see that become more of a weight of their revenue. So like, this is why these headline numbers are totally misleading. I used to be just like a lot of you guys. I look at EPS and revenue. I'm like, that's the only thing I should focus on. That really isn't. It's just it's the hood of the car. Like you have to look underneath the hood to see what's actually happening. So like I'm looking at specifics like net retention rate, looking at the Gen AI flow, part of the revenue. I'm looking at SBC as it continuing to go lower. I'm looking for any kind of signs on is there customers who are making more than $10 million, is that increasing again? Because that's really what's going to move the market because 40% of the Fortune 2000 customers used Snowflake. So I want to see if there's any kind of optimization at play right now on the bigger players because I'm seeing some little iffiness right now from the other names that reported the cycle. So like that's where I'm looking. And I'm also looking for gross margins because they spent all of last year buying as much compute as possible, aka NVIDIA, and they had to pay a pretty penny for it because they were rushing since Frank Sluman slept on the wheel and he didn't believe in AI as a major catalyst. And thank God he's gone because Snowflake would be a dud if he stayed because he really did not believe in AI and they got the perfect CEO to run the ship. But I want to see if like they have enough compute necessary now. And I need to see margins stabilize. And not just that, I kind of want it to expand more, because when revenue reaccelerates and margins also expand, that's a combination of whoa, it might run.
Yeah, that's back to $300 real quick. Real quick.
I mean, guys, this used to be an IPO darling. Like, it's still, there's a reason for that. It's not just because they're a data warehouse company. It's because they're set up to dominate the agentic AI world we're about to enter. Like, dominate. It's because they're making money on thin air. Making money on data consumption, it's thin air. It only increases day after day. Tomorrow, there's whoever pulls a query is going to pull even more data than today, because every day requires an added date to your query, and it's going to incrementally stack on each other. And in a consumption model, they're printing cash. All they had to do is create a go-to-market AI product, and they have 3 now. They produced just last year. They have an in-house LLM, and they also just made an acquisition. I don't know if it's official, but Red Panda, they acquired a streaming data company, because you kind of need you do need streaming data into like the data ecosystem. You do, and that's why Kafka is like the best open source product out there. But jury's still out if you need to have a managed source, and that's kind of why Confluent's kind of been stuck right now. I don't know, it has to be managed source, but Snowflake acquiring Red Panda kind of solidifies my initial worries about Confluent, where I don't think it could be a standalone product. But they're making these acquisitions of these BI tools to create this data platform for enterprises. It sounds eerily similar to what Salesforce did 15 years ago. Yeah. Salesforce, they saw what the cloud was going to be. They did. And they acquired a bunch of BI tools.
Well, hold on. Do you know how that happened?
No, what?
Do you know how that happened? It's actually really cool. So the CEO sat down with Steve Jobs. He sat down with Steve Jobs. And Steve Jobs says, look, I don't know how to do it, but all I can tell you is you need to be the marketplace, or you're not going to fucking make it. And that's like, I guess, all he said to him. And then that guy, I can't remember that CEO's name, but whoever CEO of Salesforce basically went over 3 years. He developed it, and they became the marketplace, and their businesses exploded. But that was actually Steve Jobs that came up with that idea, and just that was all he said. If you don't become the marketplace, you're fucked.
And that's data marketplace. And that's literally that's what Snowflake is trying to become, that data marketplace. Yeah. Like, you guys don't, there's you're able to sell your data to other customers who within Snowflake's ecosystem. That's data liquidity, guys. That is going to be a necessity in the agentic AI world, where they're not on my platform, but I want to acquire their data. If they're in Snowflake ecosystem, I could do that. Like, that's data liquidity. It's imperative. They're creating a data marketplace, but like, again, they're stupid undervalued in my opinion. If you use even data.com, but like Cloudflare and and Palantir, they're way stupid undervalued compared to those names. That's why I think they might catch a major bid. But if they don't, if it's not happening yet, like, I'm not saying this thesis breaking, guys. I really don't. I'm seeing everything I wanted to from them. And I think all the Databricks bearish arguments, like, I agree. Databricks has a leg up on Snowflake. They started at they're born with AI as their main vision. That's an advantage, because Snowflake didn't have that luxury. Snowflake started as a data warehouse company, transforming into an AI with an AI vision. So like, they're playing catch up, but there's going to be that quarter of fireworks. I think it's this one, but we'll see.
I found the exact, so here are the 3 things he told him. Grow the company 10. So Mark Benioff went and spoke to Steve Jobs, and here's what he said. Grow the company 10 times in 24 months, land a major client like Avon, who was on his board at the time. He made the introduction, they closed him. And he said, be the marketplace and build an application economy. And I guess he launched AppExchange in 2006. And then he gifted Apple the App Store trademark and appstore.com as a gift, because it was life-changing advice.
Wow.
Steve Jobs, dude. Imagine if you can get a little bit of time. Imagine him with this now. It's sad that his mind can't be applied to the application layer of AI, because that'd be interesting.
I mean,
to say the least.
Who knows the offloading, if he was still alive today with AI and features, like maybe they could have created some kind of not GPT clearly, but something.
It's like Zordon from Power Rangers, dude. So IONQ, been getting a lot of questions about this. They also have earnings coming up here. Revenue estimate 10.2 million. Interesting. What kind of growth do you think they're going to need to see? I mean, this chart is out of control, and I feel like it's hanging on by a thread just because all of these got those skyrocket valuations in such a short period of time. I think that they were really going to struggle with a less than satisfactory earnings. And personally, I would like to see this down to 30s.
Yeah, I mean, if you guys are worried about IONQ's earnings, then don't be an IONQ. This is not a quarter-to-quarter story. It's just not. You're in it for the wrong reason, and buy IBM, Google, or NVDA to get your quantum exposure because you can with those names. Like for this, it's a speculative quantum computing name. I think they have the most scalable and precise approach towards quantum computing out there. I think their trapped ion technology is like the is the most scalable approach. However, I don't think they're going to report anything this week that's going to be like revolutionary. It's going to be thesis breaking or like, whoa. This is not a quarter-to-quarter story. This is years and years. And that jump you saw, like when I got into $7, it was because I thought quantum computing was going to be the next frontier after AI. And this was the most, like I just mentioned, scalable approach and precise approach to quantum computing. So I put his name. However, it got re-rated, guys. Instead of being decades away, it got re-rated to 5 to 10 years. The next leg up is if it happens in the next 3 to 5 years, 1 to 3 years. Nothing really is going to change much quarter to quarter. So, like, if you're worried about this week's earnings, scale back. I trimmed probably way too early, but like I sold half my position at $22, $25. And now it's all profits, and I don't worry at all. It's a 1% position for me now. That's how you have to treat IONQ, where quantum computing hasn't really, it's here, but it hasn't really begun commercialization yet. So it's going to take some time. But if you're worried about like losing 20, it could go down 20, 25% this week. I don't know. If you're worried about that, your position's too big. You need to scale a bit. That's all I got to say on quantum names, especially IONQ.
Yeah, and if you zoom out, I mean, the reality is, like, as far as upside goes, 3 to 5 years, if the way I always think about it and frame it to myself is, hey, if someone said, give me 10 grand and in 5 years I'll double your money, I'd take that bet. I'm giving them 10 grand. And then if they said, hey, in 10 years, I'm going to more than double your money, I'd take that deal. That's kind of what's sitting on the table, in my opinion, right now. Those are the opportunities from a growth perspective, conservatively speaking. I also want to call your attention to the fact that as someone went and attended to whether short or just sell pressure on the institutional side, it was happily gobbled back up with buy side. So just pure and simple, usually you see this flipped, green followed by red, and then you get downturn. You don't often get it in reverse, which typically signifies mass accumulate. So basically institutions would have had scaled in orders here, but because the sell side washed straight down, they all got filled. So if they're holding the base between 30 and 37, I think that they're going to buy more. So keep that in mind as you look at these. Other than that, I think the only other one I think they were talking about was is Home Depot have earnings coming up?
I got to hop off right now. I got a call, but
it's
guys,
6 o'clock.
Yeah. Final words for me. If you're worried about if the past 2 weeks is making your stomach like a little wheezy and you just feel like a gut punch, you had too much skin in the game. That's all I got to say. You need to take that lesson, have enough dry powder in the silence, because really we haven't felt pain yet. This is just a slight correction, especially in growth world, just a slight correction. This isn't an August 2024 situation with the yen carry trade where a lot of the names are down like 50, 60%. VIX is at 60 level. The Qs are like, and almost approaching bear market territory. Like it's not that. So I think that's a good example of being overly leveraged. Don't do that. Have enough cash position because, like, for me, I'm stoked. At a 12% cash position, now it's down to 9% because I've been adding certain names. But like, that's kind of approach you need to have in the rest of the year. And I was very open at the beginning of the year. It's going to be a choppy year. It's not going to be 2023, 2024. It's going to be maybe mid to high single digit growth in the market, but it's going to be a choppy way to get there. It's just going to be super choppy. We've experienced that so far. It's going to be a volatile year. So Wednesday is going to be a massive day. So if you have too much skin in the game, take some off the table, and maybe there's a dip opportunity after on Wednesday, and you can implement your soldiers that way. But be safe out there, guys. Live to trade another day. Okay.
Love y'all. Stay blessed now. Bye bye.